Good morning, one and all. This is N.Narender, working as degree lecturer in commerce, TTWRDC, Nagar Kannur. Today, I would like to explain basic concepts in GST. Before going to learn about this, I would like to give a brief introduction about tax and types of taxes. In simple words, a tax is a fee charged by the government on a product, income, or activity. The purpose of taxation is to finance the government expenditure. The tax is a compulsory payment to be made by every resident of India. It is a charge or burden laid upon persons on the property for support of a government. The government decided that rates and the items on which tax will be charged, like income tax and GST, etc. The taxes can be defined in very simple words. It should be considered as a government revenue or source of income to the government. The money collected under taxation system is put into use for the country's development through several projects and introduction of several schemes. Here, and taxes are mainly classified into two types. One is the direct tax, another one is the indirect tax. Let me know what is direct tax and what is indirect tax. The direct tax means the individuals directly pay these taxes to the respective government. In this case, the both incidence and impact of will fall in a single person, that is an assessee. The most notable example for direct taxes are income tax, wealth tax, corporate tax. So next we'll learn about indirect tax. What is indirect tax? Indirect taxes are not directly paid to the government but are collected by the intermediaries who sell or arrange product and services. In this case, the incidence and impact of taxes will fall on two different persons. Okay. The best example for indirect taxes is GST. Okay. Now we'll go for our main discussion. What is GST? Yes, let me. GST is a tax on goods and services with comprehensive and continuous chain of set of benefits from the producer's point and service providers point up to the retailer level. GST is expected to be levied on at the destination point and not at various points, that is from manufacturer to retail outlet. It is essentially a tax only on value addition at each stage, and a supplier at each stage is permitted to set off through a tax credit mechanism, which would eliminate the burden of all cascading effects, including the burden of SENVAT and service tax. Under GST structure, all different stages of production and distribution can be interpreted as a mere tax passed through, and the tax essentially sticks on final consumption within the taxing jurisdictions. And currently, a manufacturer needs to pay tax when a finished product moves out from the factory, and it is again taxed at the retail outlet when sold. The taxes are levied at the multiple stages such as SENVAT, Central Sales Tax, State Sales Tax, octroi, etc. It will be replaced by GST to be introduced at the central and state level. Here, all the goods and services, barring a few exceptions, will be brought into the GST base. There will be no distinction between goods and services. Under GST, the taxation burden will be divided equitably between manufacturing and services through a lower tax rate by increasing the tax base and minimizing exemptions. However, the basic features of law such as chargeability, definition of taxable evidence, and taxable person, measure of levy, including valuation provisions, basis of classification, etc., would be uniform across the statutes as far as practicable. The existing GST will be discontinued. Instead, a new statute known as IGST will come into place on the interstate transfer of the goods and services. By removing the cascading effect of taxes, CST, additional customs duty, surcharge, luxury tax, entertainment tax, etc., CGST and SGST will be charged. And come to the next slide. Yes. By observing this slide, we can get an idea the tax structure before implementation of GST in India. At the time, the taxes are mainly classified into two types: the direct tax and indirect tax. The direct tax again subdivided into income tax, the wealth tax, as we discussed just now, and indirect tax. And indirect tax again subdivided into two types: central indirect taxes and state indirect taxes. Central indirect taxes are excise duty, service tax, customs duties, and state indirect taxes are VAT, entry tax, luxury tax, lottery tax, and etc. These are taxes which are existed before implementation of GST in India. And yes, this is another slide which indicates the tax structure under GST in India. That means after implementation of GST, this is the tax structure which follows. As per this, taxes are mainly classified into two types: direct tax and indirect tax. Here, direct taxes are subdivided into income tax and wealth tax, but here only indirect taxes is only one is there, that is the GST. It is again subdivided into based on the interstate transactions and interstate transactions. These are the CGST and SGST, IGST. These are considered as a component of GST. These we will discuss in later in a detailed manner. Next, the journey of GST in India. Journey nothing but history of GST in India. Vijay Kelkar committee recommended GST in 2004 during the period of Atal Bihar Vajpayee government. And first discussion paper was published in 2009. 90% of provisions of today from that paper. On 7th May 2015, Lok Sabha passed it. On 3rd August 2016, Rajya Sabha passed. Even it is implemented Jammu and Kashmir also. The GST now permanent, rollback impossible even if present political parties gets defeated in the next elections. On 1st July 2017, GST was implemented in India. GST is the biggest indirect tax reform in India since independence. With the implementation of GST, 23 taxes and 17 cess have been subsumed in GST. And here, subsuming of existing taxes and CGST. With the implementation of CGST, the following taxes are abolished. Those are central excise, additional duties of customs, service tax, surcharges, and all cesses. And with the implementation of SGST nothing but state goods, service, and tax. With the implementation of SGST, the following indirect taxes are abolished or cancelled. Those are VAT, sales tax, entertainment tax, luxury tax, lottery tax, entry tax, purchase tax, stamp duty, goods and passenger tax, tax on vehicles, electricity, banking, real estate. Okay, and IGST. With the introduction of IGST, central sales taxes are abolished. Okay, by observing this slide, with the implementation of GST, the following taxes are subsumed here. The list is given separately in the central indirect taxes and state indirect taxes. These all indirect taxes are subsumed due to the implementation of GST. Let me discuss the central indirect taxes: central excess duty, additional excess duties, service tax, central sales tax, additional customs duty, special additional duty of customs, central surcharges and cesses insofar as they related to supply of goods and services. These all central indirect taxes are abolished due to the implementation of GST. And come to the state level indirect taxes. The state VAT, sales tax, entertainment tax, octroi and entry tax, purchase tax, luxury tax, taxes on lottery, betting and gambling, state surcharges and cesses insofar as they are related to the supply of goods and services. All these state level indirect taxes are subsumed due to the implementation of GST. And let me discuss the component of GST. Here we have 4 components are there. One is the CGST, another one is the SGST, another one is the UTGST, the last one is the IGST. Yes. Let me discuss what is CGST. CGST means Central Goods and Service Tax. It is applicable only for intrastate and intra-UT supplies, where goods and services supplied within the same state or same UT, then CGST is applicable. Okay, where goods and services supply are within the same state, then CGST is applicable. Next, SGST. It is also same. It is levied on intrastate supply of goods and services. And UTGST also levied on intra-UT supply of goods or services or both. IGST is levied on the interstate between 2 states or between 2 UTs. In such cases, IGST imposed. And also on imports of goods from foreign countries. At the time also IGST is imposed. Yes. CGST stands for Central GST, the tax collected by the central government, applicable on supplies within the state. Come to the next, SGST stands for State Goods and Service Tax. Tax amount is collected by the respective state government, applicable on supplies within the state. Next, come to the UTGST, stands for Union Territory GST. Tax amount is collected by the respective Union Territory, applicable on supplies within the Union Territory. The last one is IGST, stands for Integrated Goods, Service and Tax. The tax amount is collected is shared between central and state, applicable on interstate and import of transactions. And next, yes, let me understanding the CGST, SGST, UTGST IGST concepts in a detailed manner. Plus CGST plus SGST state 1. When the goods or services or both are supplied within the same state or within the same UT, then it attracts the CGST plus SGST. If the transaction between two states, then it attracts the IGST. Or transactions between one state and one unit, one UT, UT nothing but union territory, then it attracts the IGST. And also the transaction between foreign country to any state or any UT, again it attracts the IGST. Okay, within the same state it attracts the CGST plus SGST. Between the two states or between the two UTs, it attracts the IGST. If we get anything from the foreign countries, we purchased any goods, okay, from the foreign countries, that attracts the IGST. Next, what are the, let me discuss the components of GST. The first one is CGST. CGST is nothing but Central Goods, Service and Tax. The CGST is a tax levied on intrastate supplies of both goods and services by the central government and will be governed by the CGST Act. The central CGST is levied by the central government. Central GST levied on intrastate or intra-UT transactions. That means transactions that take place within the same state or within the same UT. And the central GST is levied on supply of goods or supply of services or both. The taxable event in central CGST is intrastate or UT supply of goods on services or both. Income from CGST is levied and collected by the central government. With the introduction of a CGST, the following taxes are abolished. The government governed by the central government, it will include the following taxes: central excise duty, service taxes, countervailing duties such as education, secondary higher education cess, additional excise duty. Next, and let me discuss another component, that is SGST. SGST means State Goods and Service Tax. It is levied by the respective state governments. The state government is levied on intrastate transactions. That means transactions that take place within the same state, State GST is levied by the on supply of goods or services or both. The taxable event in SGST is intrastate supply of goods and services or both. The SGST is levied under the respective SGST Act of different states. Here, the governed by the central government, it will include the following taxes: VAT, sales tax, purchase tax, entertainment tax, luxury tax, lottery tax. Next. Yes, structure of IGST. IGST is will be applicable on any supply of goods or services in both cases of import into the India and exports from India. IGST levied by the central government. IGST is levied on intrastate or inter-UT transactions. That means transaction that place between two states or two more states or UTs. IGST levied on supply of goods or services or both. The taxable event in the IGST is interstate or UT supply of goods or services or both. Central sales tax got subsumed into the IGST. IGST levied under the IGST Act 2017. Income from the IGST shall be shared between the central and respective state government. IGST is sum of total of CGST and SGST. Next one is UTGST. UTGST means Union Territory Goods and Service Tax. The UTGST is levied by the central government. The UTGST is levied on intra-UT transactions. That means the transaction that take place within the same UT. UTGST is levied on supply of goods or services or both. The taxable event in UTGST is intra-UT supply of goods or services or both. The VAT that was applicable in Union Territories got subsumed in UTGST. The UTGST is levied under the UTGST Act 2017. It is applicable to all UTs except Delhi and Puducherry because of they have own tax structure. And income from UTGST is levied and collected by the UTs without state legislations. And this is the GST multi-tiered system. It means as per the GST, tax rates are mainly classified into 5 types. 0% tax rate, 12% tax, 5% tax rate, 12% tax rate, 18% and 28%. Okay, we will discuss this. Yes. So these are the GST slabs rates, categorized into 5 types. The first one is the zero tax rate or exempted GST rate slab, no tax. The second category 5% GST tax slab. Third one is 12% GST rate slab. The fourth one is 18% GST rate slab, and the last one is the 28% GST rate slab. And let me discuss what are the items or products come under these categories. The first category is 0%. That means no tax. Here, the 70% of goods and services fall under this category. Those are some of these that are regular consumption includes fresh fruits and vegetables, milks, buttermilk, curd, natural honey, flour, besan, bread, all kind of salt, jaggery and whole cream grains, fresh meat, fish, chicken, eggs, along with bindi, sindoor, kajal, bangles, drawings and colorings, books, stamps, judicial papers, printed books, newspaper, jute and handloom, hotels and lodges, with tariffs below ₹1,000 and so on. These all items are exempted from the GST. No tax on these products. Okay, next come to the example. Goods at the rate of 0% exempted under GST. These pictures will clarify very clearly. Yes, fish, non-processed, no tax. Edible vegetables, no tax. Cereals, no tax. Raw silk, no tax. Fruits, no tax. Okay. Canned janggery, hearing aid, bangles, live animal except horses, tender coconut. These products are fully exempted from GST. Okay, and here silk waste, all seeds, wood charcoal, handloom, organic, manure, non-branded. Okay, these are also fully exempted from tax. Coffee beans, ginger, human blood, all types of contraceptives, and firewood, wood fuel. Okay, these are also fully exempted from taxes. Okay, all these. Okay, all these pictures indicates that there is no any tax on these goods. Okay, next come to the second category, 5% GST rates. Okay, the 14% of goods and services fall under this category. Some of these include apparel below rupees 1000 and footwear below rupees 500. The packaged food items, cream, skimmed milk, powder, branded paneer, frozen vegetables, coffee, tea, spices, pizza bread, rusk, sabdana, cashew nut in shell, raisin ice, fish fillets, kerosene, coal, medicines, agarbatti, postage or revenue stubs, fertilizers, rail and economic loss, air tickets, small restaurants, and so on. Okay, these items are taxed at the rate of 5%. Okay, 5%. Next, yes, 12% GST rate slab. And here the 70% of goods and services fall under this category. Vegetables like frozen meat products, butter, cheese, ghee, dry fruits in packaged form, animal fat, such as fruit juices, namkin, ketchup and sauce, Ayurvedic medicines, all diagnostic kits and reagent and cell phones, spoons, forks, tooth powder, umbrella, sewing machines, spectacles, indoor games like playing cards, chessboard, carom board, ludo, apparels above rupees 1000, non-AC, restaurant, business class, air tickets, state run lottery, work contracts, and so on attract a 12% of GST. Okay, all these products or activities attract the 12% of GST. 12% of GST. The next, here 18% GST rate slab. The 43% of goods and services fall under this category. Those are pasta, biscuits, cornflakes, pastries and cakes, preserved vegetables, jams, soups, ice cream, anise and mixed condiments and seasonings and minerals water, footwear costing more than rupees 500, camera, speakers, monitors, printers, electronic transformer, optical fiber, tissues, sanitary napkins, notebooks, steel products, Edgar and its pots, aluminum foil, bamboo furniture, AC restaurant that serve liquor, restaurant in 5-star and luxury hotels, telecom services, IT services, branded garments and financial services, and so on attract an 18% of GST. Okay, all these products and services attracts the 18% of GST. Next, the 28% GST rate slab. 19% of goods and services fall under this category. The rest of edible like chewing gums, bindi, molasses, chocolate not containing cocoa, valves and wave coated with chocolate, pan masala, acrid water, personal care items like deodorant and shaving creams, aftershave, hair shampoo, dye, sunscreen, paint, water heater, dishwasher, weighing machine, washing machine, vacuum cleaners, automobiles, motorcycles, 5-star hotel stays, race club bettings, private lottery, and movie tickets above rupees 100 have been clubbed together under 28% of GST slab. It means all these products, all these goods and services attract the 28% of GST slab rate. And next here, some of the goods and services are exempted from the GST. Let me discuss what are those. Alcohol, tobacco, petroleum products are likely to be out of the GST regime. Here, tax on items containing alcohol. Yes, these products are fully exempted from the GST. Alcoholic beverages would be kept out of the purview of GST. Sales tax VAT could be continued to be levied on alcoholic beverages as per the existing practice. In case it has been made VAT by some states, there is no objection to that. Excise duty which is presently levied by the states may not also be affected. Tax on petroleum products. Petroleum products have also been constantly brought under the GST. However, it has also been provided that petroleum and petroleum products shall not be subject to the levy of GST till notified at the future date on the recommendation of the GST Council. The tax on tobacco products, yes, the tobacco products are also fully exempted from the GST. Here, the tobacco products would be subject to be GST with ITC. Central may be allowed to levy excise duty on tobacco products over and above GST with ITC. Yes, and the taxation of some services are also exempted from the GST. Let me discuss. Those are, as indicated earlier, both the central and states will have concurrent power to levy tax on goods and services. In the case of states, the principle for taxation of intrastate and interstate has already been formulated by the working group of principal representation of Department of Revenue, Government of India. For interstate transaction, an innovative model of integrated GST will be adopted by appropriately alighting and integrating the CGST and IGST. And next, yes, taxes not likely to be subsumed under GST. That means still these taxes are collected by the central governments as well as the state governments. What are those? The central governments are collected the following taxes. Those are customs duty, other customs duty like anti-dumping duty, safeguard duty, etc., and export duty. Okay, and come to the state taxes. And state government also collected these taxes: road passenger tax, toll tax, property tax, electricity duty, stamp duty, and registration fees. Okay, these taxes are still continued after implementation of GST also. Yes. Now I would like to explain the difference between the previous indirect tax system and the present indirect tax system. Here, the post GST regime and GST regime. Here, before implementation of GST, the manufacturer cost is 4 lakhs. Excise duty is 12%, infrastructure cess is 1%. It comes to the 52,000. And again, VAT is 12.5%. 12.5%. It comes 56,500. The total, the dealer invoice value is 5,08,500. Okay, the dealer cost 4 lakhs. Plus excise duty 52,000. The margin, the expected profit margin is 50,000. Finally, the sales price for dealer. Okay, the dealer is fixed this price. What is the price? 5,02,000. And again, it attracts the VAT 12.5%. How much amount is that is 62,750. The finally the selling price of car. This is the data regarding the a car. Okay, the selling price of the car is comes to nearly 5,64,750 under previous indirect system. Okay, here under previous indirect tax system we have so many indirect taxes are there. Okay, excise duty, VAT. Okay, next come to the after implementation of GST, the same amounts are applicable here also. The manufacture cost of the car is 4 lakhs, CGST 9%, SGST 9%. The totally 36,000. The dealer invoice value is 4 lakhs 72,000. The dealer cost is 4 lakhs plus margin. The expected profit margin is 50,000. The sales price for dealer is 4 lakhs 50,000. And again CGST 9%, SGST 9%. Come to the 40,500, 40,500. So finally, the price of the car is rupees 5,31,000 under the present GST system. Okay, with the implementation of GST, the car price is reduced 33,750. This is the benefit to the consumer.